Okay, welcome guys, the recording goes on. So let's start this session with the criteria tracker, because I have lots of recommendations that you'd like to see how the criteria tracker actually works. For example, Chilling Markets recommended this topic, and I just want to show you how to actually track your criteria, for example, for the zones, because it's really, really important to track your criteria. You can actually avoid lots of losses. You can avoid lots of bad positions by just tracking your criteria with the simple Excel criteria tracker, which is a simple file, right? It's just an Excel file. It's not a Notion file, it's not anything. It's just an Excel file, and it's easy to use, simple, and you can easily track your criteria. Okay, let's just see quick 3 examples for this criteria tracker. And the first one is here. I just changed the color of this supply zone to red. Okay. So how can we actually track the criteria? In this example, price was in a downtrend here, as you can see. Let's say price tapped into a higher time frame demand zone in this region, but because that will be realistic. So price tapped into a higher time frame, let's say 15-minute demand around this region. And after a 15-minute demand tap, it reacted on the supply zone reaction and flipped this supply zone. As you can see, here is the flip line. So this means we have the first zone to be tracked. This will be our first zone. Okay. After this, as you can see, price created a pullback here and created liquidity for this zone here, this region. And after liquidity creation, it created a breakout structure to the upside and created another zone. This zone has no liquidity, as you can see. This zone is just a simple zone. This is the first example. Let's see how can we actually track the criteria for these zones. Let me just close this a little bit so you'll be able to see all of the zones. So here's the zone criteria. First zone. Let's say the first zone has broke through this supply zone with inefficient push. So this has happened with inefficient push. We will just simply put an X in the first zone inefficient rubric here. Another breakout structure, change of character, opposite zone break. As you can see, this zone has created this downside. I will just mark it with a number. This will be the first zone. This will be the second zone. So the first zone has created a flip, which is an opposite sign zone break with an inefficient push. So I will just put an X in this rubric too. Second, liquidity creation. It has created liquidity because, as you can see, here's liquidity for this zone. One more X. Liquidity sweep. It has fed no liquidity, right? There's no liquidity at this region. So there won't be an X in this rubric. Last one, sorry, let me just extend this. Last one, flip zone. It's a flip zone, so I will put an X here. Okay, perfect. Second zone, the second zone has created breakout structure to the upside. Here, as you can see, let's say it has been created by an inefficient push because this is an inefficient push. I will just mark it here with a breakout structure to the upside, BOS upside, and this is a change of character upside here. So it created a change of character and created also a flip, right? Okay, open the criteria tracker. It has breakout structure X. Let's say it has created an inefficient push too. That has an X2. Liquidity creation, there's no liquidity created for this zone, so it won't have an X, right? Liquidity sweep, it swaps some liquidity because here's the first tap, here's the second tap. Liquidity sweep will have X. Flip zone, it's not a flip zone, right? So the first zone has 4 criteria, the second zone has 3 criteria. Which one will be stronger? What do you think? Which one will be stronger? The first one or the second one?
First one.
Of course, that's obvious, right? The first one will be stronger because it has more criteria. And you can just simply track your criteria using this criteria tracker. And if you're confused about the zone and you're confused about the cancellation, let's say, and you don't know if price will reverse on this zone or if it will reverse on the downside zone, just simply track your criteria. And if you're confused about your zones, just place an order on the zone which has more criteria, in this case, the first one. So we just simply place an order on the first zone because it has more criteria, and more likely the second one will be broken. Let's see price reverses on the second zone and creates continuation example and creates a breakout structure to the upside here, creates liquidity and another breakout structure. You will have new zones. You will have new zones. You'll be able to track this zone and you'll be able to track this zone. Track your criteria again. This will have liquidity. This will be swept. You'll be able to enter here. So just don't panic if your tracked zone, for example, in this case, the first one won't be tabbed. Just don't panic. Just move on. And always track your criteria, because this way you can actually identify which zone will be stronger, which zone is stronger, which zone will be able to hold price, which zone will be able to reverse price, which zone can you place a limit on. And yeah, whichever zone has more criteria will be stronger. Let's move to the second example. This is our first zone in this case. First, second. Okay, as you can see, the concept is the same. Price is moving in a downtrend. Price has created a supply zone. Price has flipped this supply zone from this movement. Let's say this is creating an inefficient push. The first zone has no liquidity, as you can see. And we just open the criteria tracker again. The first zone, fill it is axis. Okay, so the first zone has created an inefficient push. Let's say it created an inefficient push and broke through this supply zone with inefficient push. Perfect. First criteria, X. Breakout structure, change of character, opposite zone break. Yes, it has broke, change character here to the upside. So this is a change of character zone. Liquidity creation, there's no liquidity, no X. Liquidity sweep, there's no liquidity sweep, no X. Flip zone, that's a flip zone, so there will be an X. 3 criteria zone. Second zone, as you can see, it created inefficient push to the upside. Let's see it created an inefficient push. Breakout structure, change of character, opposite zone break. There's a breakout structure to the upside. Actually, it's a swing break structure to the upside. As you can see, this is a swing high. Price has broke structure to the upside from this second zone and broke the swing high. So it counts as a higher time frame breakout structure. A higher time frame change of character too. So it will have an X. Liquidity creation, it has liquidity here, as you can see, double bottoms, liquidity. Liquidity sweep. Okay, let's say actually it swept some liquidity here at this region. So let's say it swept liquidity 2 and broke structure 2. So it will have a liquidity sweep X2. Flip zone, it's not a flip zone, so that it won't have an X. Which zone will be stronger? 4 criteria zone, 3 criteria zone. Which one is stronger? What do you think?
2.
The second one.
The second one, exactly. Just simply track your criteria. Let's say there's no liquidity creation for this zone. So this breakout structure has happened without creating a liquidity. Open the criteria tracker, remove the liquidity creation X. 3 criteria zone versus 3 criteria zone. Which one will be stronger? What do you think? Which zone will hold? Which one is stronger? The second or the first?
Well,
no liquidity, no liquidity. Sorry?
For confirmation.
Sorry, I couldn't hear.
First one.
First one. Why do you think the first one?
Because it's a flip.
What zone is strong?
Where is mitigated?
Liquidity creation or confirmation.
Second zone exactly is liquid, could be liquidity for the first one, but also the second one could hold. As I told you in the previous live session, the extreme zones that had created the original change of character, the first change of character to the upside, I don't know if you remember for this, but I said this in the previous live session. So the first zone that has created the original change of character to the upside and has changed character first will be always stronger than the decisional ones. So in this case, the second one could be liquidity for the downside zone. So the second zone could be liquidity for the first zone. That's true. But also, the second zone could also play out because that's also a valid zone with 3 criteria, and this is also a valid zone with 3 criteria. So 3 criteria versus 3 criteria, which one will be stronger? You don't know. You don't know. Of course, in theory, the first one is stronger because it has created the first change of character to the upside. But the second has same criteria as the first one. So actually, how can you play this scenario? How can you actually benefit from this scenario? It's simple. I believe I showed you in the I don't know 2 weeks earlier backtesting session. You can place double limits on both of these zones with half of the risk. So you can place a limit on the second zone. Let me just extend this zone, and you can place a limit on the first zone if you're not sure which zone will hold. So both of these zones are valid. Both of these zones are valid. Both of these zones have 3 criteria, 3 criteria zone, 3 criteria zone. You can just simply put double limit order on both of these zones. The first one, half risk, second one, half risk, 0.5 risk, 0.5 risk. Or if you're risking 0.5 per position, 0.25 and 0.25, this one also. You can just simply half your risk because both of these zones have 3 criteria. So yeah, actually, and if you take a double stop loss, this one hits stop loss 2, this one hits stop loss 2, you just lose your simple risk because let's say you risk 1% per position, right? If you have your risk, so you put a 0.5 here, put a 0.5 here, you will lose 1% maximum. So just simply half your risk. Of course, it will generate you lower profit if let's say this hits TP, but at least it hits TP, right? So just simply have your risk and use the double zone entry. If both of the zones have the same criteria, three criteria, half risk, this could help. This could really help. Just backtest it, try it. And first, please first backtest it. Because if you don't backtest it, you won't know how it works on the live charts. So I'm asking you please to backtest this scenario. Okay, here's this third example. Delete the axis. Either sit on our hands and wait. Actually, yeah, Jordan, that could be a possibility too, to wait on your hand. I mean, sit on your hands and wait for the zone to play it out. And actually, you can wait for confirmation entry in both of these zones. So even though this is a 1 minute chart, and let's say both of these zones have 3 or 4 criteria, so equal criteria, you can just simply wait for confirmation entry too. So there are two options. The first option is that place a double limit order with half risk. The second option is just simply wait for a confirmation entry. And let's say it creates a change of character here on the first zone, on the 1 minute chart, you'll be able to enter. Let's say it breaks below the first zone, creates a change of character here, you'll be able to enter. But in this scenario, I would use the half risk double entry, because this is also a confirmation entry. This entry has been confirmed because there's a breakout structure, main trend, for example, this is a main trend. There's a liquidity for this zone, there's a liquidity for this zone. So both of the entries are confirmed. These are both on the 1 minute time frame. There was a confirmation because price stepped into a 50-minute demand zone, change character here, flip the zone. So this is a confirmation entry, but you don't know which zone will hold actually. But of course, you can wait for a confirmation entry on the confirmation entry too. That's totally up to you. I'm just showing you how can you actually trade this scenario. And I believe the best scenario in this case, if you use double risk entry here, half risk, that will be the best one. Okay. So let's see the third example, which I believe it will have the same criteria as too. So as you can see, the concept is the same. Flip zone, let's say here's a 50-minute demand tap. After a 50-minute demand tap, it created a change of character to the upside here. Flip zone also. But let's just say it has created no flip zone, and it has created a change of character with one impulse movement without a flip. So there will be a zone somewhere around here. So this is not a flip. This is not a flip. This is just a simple change of character to the upside. Okay, in this scenario, let's track our criteria. Let's say this movement has happened with inefficient movement to the upside. So inefficient change of character to the upside has happened. Inefficiency X, change of character X. Liquidity creation, as you can see, here's double bottoms X. Liquidity sweep, no liquidity sweep, as you can see, price has swept, no liquidity at this region, no X. Flip zone, that's not a flip zone, right? Okay, second zone. Let's just make things a little bit like this. Okay, so the criteria are the same for the first zone. Let me just mark it with 1. Let me just mark it with a 2. Okay, so the criteria for the first zone is the same, right? Inefficient change of character to the upside. Here's a change of character line. Liquidity creation XX. Inefficient movement to the upside X. So it has 3 criteria. It has 3 criteria. It's a 3 criteria zone. Let's see the second zone. Second zone, it has created an inefficient push to the upside, as you can see here. This is an inefficient push. It created a breakout structure here to the upside. So 2 criteria are thick. First criteria, inefficient push. Second criteria, breakout structure to the upside. Third criteria, liquidity creation. There's liquidity for this zone, as you can see. It created liquidity double bottoms here at this region. Liquidity creation X. Liquidity sweep, as you can see, it swept liquidity at this region too. Here's double taps. This movement has swept this liquidity from this second zone, right? So this is the extreme of the sweep. The second zone is the extreme of this liquidity sweep to the upside. Okay, so the second zone will have one more X, and it's not a flip zone. In this case, the second zone has 4 criteria, the first zone has 3 criteria. Which one will be stronger? What do you think? I'm just asking because I have to ask which one will be stronger.
Top one.
Second
one.
Second one, right?
Yeah. The second one, yeah.
Exactly.
Yeah.
Come on, guys, don't be shy. Just feel free to answer. So the second one will be stronger because it has 4 criteria. This is a 4 criteria zone. This is a 3 criteria zone. Even though this is the origin of the change of character. So the first zone has created the first change of character to the upside. And I said the first character changing zone will be always stronger than the decisional one. But in this case, the second decisional one will be stronger because it has more criteria than the first one. First one, inefficient movement, change of character to the upside, liquidity creation, 3 criteria. Second one, inefficient movement, break of structure, liquidity sweep, liquidity creation, 4 criteria. So this zone has swept liquidity, this zone has created liquidity, this zone has created inefficient push, this zone has created break of structure. So it has more criteria, it will be more likely to hold price and reverse price. So in this case, I will use the second zone to actually set a limit order on, and this will be my entry point. Of course, there's a possibility that you'll be swept out from the zone because there's liquidity below this zone. There's liquidity. You can't argue there's no liquidity, but it's safer to enter on the 4 criteria zone with liquidity below it than without the 4 criteria. So let's say, for example, this zone has 4 criteria, this zone has 3 criteria. In this case, you can't open a limit order here on the second zone because the first one has more criteria and there will be a liquidity sweep. But if the second zone has 4 criteria and the first zone has 3 criteria, it's safer to actually use a limit order on the second zone, even though this has liquidity. But in this case, you can also use it double risk entry. You can also use the half risk entry. So just place a limit order here, place a limit order here, half risk, and just simply see which one will be played out. Okay, so these were the examples. Were these helpful? Did you actually understand how to use the criteria tracker?
Yes, perfect.
Yes.
Yeah, it's so helpful.
Yeah, yes.
Perfect. What is the difference between flip zone versus that's basically the same. Pafilo. Flip zone and opposite sign zone break is basically the same. I just wrote it on a different name. And then the criteria, that will be for the next session. We have to analyze the higher time frame. But basically, you can use the entry criteria tracker the same way, just like you use the zone criteria tracker. So as you can see here at the entry criteria, you can just simply use it the way I use the zone criteria tracker, literally the same way. Okay. So let's say there's a zone which has created higher time frame zone mitigation, inefficiency, strong reaction on the zone, change of character, liquidity sweep, liquidity creation, price isn't coming from unmitigated zone, pro trend, counter trend. You can just simply put an X in these boxes if it has the criteria, just like I did with the zones. So yeah, it's simple. So zone tracker is more likely for, no. These are for entry zones. But also you can use it for higher time frame zones. Of course, you can use it for higher time frame zones too, but these are mainly for the entry zones. So you'll be able to identify which zone will be your entry point and which zone that will be your entry point. Can we get this tracker? You already have this. It has been posted in the resources channel. So it's free for you to use. It's in the resources channel for like a month.
Yes, guys, I will link it on the question channels.
Yeah, thank you, John. How do we between the criteria, which one are stronger? Okay, I will just answer the questions later. Let's just jump to the actual higher time frame analysis. Let's see the overall higher time frame picture on Euro USD on the current price action. So let's just focus on this region first, and let's make our higher time frame 4-hour analysis at this region on this leg first. So what did I tell you? Which has created here after the daily demand tap? There was a 4-hour change of character to the upside, and this 4-hour change of character to the upside created what? We started from this change of character to the upside. Anyone? What started from this 4-hour change of character to the upside? Price tapped this demand zone, daily demand zone. Exactly, that bullish momentum. That's the answer. So from this change of character, from this 4-hour change of character to the upside, the bullish momentum started to the upside. And as you can see, price is currently in a bullish trend at this region, creating change of character to the upside, creating inefficient movements to the upside, creating zone respections, demand respections, creating demand chain, break of structures to the upside, inefficient movements, zone respections. That's our structure on this leg actually. I will just remove your drawing from the screen, sorry. this one too. Okay, let's see the zones. Let's see the breakout structures, and let's see the liquidity sweeps. So here was the first change of character on the 4-hour chart to the upside, as you can see, after the daily demand zone mitigation. This was the first change of character. So this was the first sign of the change in the trend, in the actual higher time frame trend, because this was a zone, this was a daily zone, this is a daily demand zone. And daily demand zones can be confirmed by the 4-hour chart. So let's say if there's a change of character on the daily demand zone, on the 4-hour chart, the trend will be confirmed for a reversal. So daily demand zone, price is coming down. This is the 4-hour chart, top of that daily demand zone, change of character to the upside, confirmed change in the trend on the higher time frame. So if price creates a change of character in the 4-hour chart, on the 4-hour chart, inside of a daily demand, that will be a confirmed change in the higher time frame trend. So confirmed change in the higher time frame trend has happened here at this moment. So our trend on the higher time frame on the 4-hour chart is bearish. Bullish at this region. Okay. As I said, the daily zone can be confirmed by the 4-hour chart. So let's say price just breaks below this zone. That will be also a confirmation for a continuation of the trend. So let's say this is a daily demand zone right here. Price stepped into this zone and not changed character to the upside. It just broke below this zone. This is also a confirmation of the continuation of the bearish trend. So daily chart, the daily demand, daily supply can be confirmed on the 4-hour chart. And all time frames are fractal. A 4-hour chart can be confirmed on the 15-minute chart. So if there's a 4-hour zone, it can be confirmed on the 15-minute zone. Let's say there's a 4-hour zone. This is actually a 4-hour zone. This 4-hour zone can be confirmed only on the 15-minute chart. So if price steps this zone, you can only confirm this zone on the 15-minute chart. If price creates a change of character to the downside, that will be a confirmation of the change in the trend. So let's say price taps this zone, taps this 4-hour zone, creates a change of character on the 15-minute chart to the downside. That will be a confirmation of the bearish trend. So the trend will change to bearish at this region. So we can expect a bearish expectational order flow to the downside. But let's say if price taps this zone and creates a break of this zone, that will be a confirmation of this trend that it will continue to be bullish. So 4-hour zone can be confirmed by a 15-minute zone. A 15-minute zone can be confirmed by what? I'm asking you. 1 minute, exactly.
1 minute.
Exactly. A 15-minute zone can be confirmed by a 1-minute change of character / 1-minute break. If a 15-minute zone is being tapped, you can confirm that zone or confirm the actual lower time frame trend by a 1-minute change of character on that 15-minute zone. All time frames are fractal, right? So at this region, our trend is bullish because price has changed character here on the 4-hour chart. So the higher time frame trend at this region is bullish. But let's say if price steps into this supply zone, or it doesn't have to tap into this supply zone. Let's say price creates a breakout structure here to the downside and breaks this low to the downside. That will be a 4-hour breakout structure to the downside of a daily low. This is a daily low point. So that will be a confirmation of a daily trend again. So there's more likely a daily demand zone at this region, an extreme demand zone. And if price breaks below this daily demand zone, that will be the confirmation of the continuation of the bearish order flow. So you can confirm the daily chart with a 4-hour chart. But inside of these movements, inside of these 4-hour movements, you can just simply confirm the movements on the 15-minute chart. So your chart can be bullish at this region, even though it's bearish on the 4-hour chart currently. It can be bullish at this region because price can actually tap into a 15-minute zone and can confirm that 15-minute zone with a 1-minute change of character. So inside of this 4-hour candle, your trend on the 1-minute chart can be easily bullish. But you have to know the overall higher time frame direction, which is bullish in this case, of course, heading up to this supply zone. So actually, does this make sense to you? You understand how to confirm the zones?
Yes.
Yes.
Okay. So what are the expectations from these zones? What are the expectations from the correlated time frames? What can we expect from price actually here at this region? Since we know that price has changed character here on the 4-hour chart, we know that price is in a bullish trend up to this supply zone, because this is the less recent supply zone, less recent variable supply zone. We've talked about this several times. We are expecting a tap of this supply zone. And knowing the fact that price is bullish on the higher time frame on the 4-hour chart, we can expect this supply tap, and we can expect a reaction on this supply zone. But until this supply tap happens, anything can happen between this price action region and this price action, this supply zone. Anything can happen between these zones. This void will be filled up sooner or later. but anything can happen between these zones. Actually, price can create a change of character here to the upside, create a bullish order flow, create a change of character to the downside, create a bearish order flow, create a bullish order flow, create a bearish order flow, create a bullish order flow, tap this supply. So anything can happen between this supply zone and this price action region. All you have to do is react on the lower time frame. You just have to know the overall higher time frame direction, which is bullish in this case. If you know the higher time frame intention, if you know where price is actually heading, you'll be able to easily trade the lower time frames. We know that price is heading up to this supply zone. Our main target will be this supply zone. We'll be aiming for long trades, right? Those are the main trend trades. We'll be aiming for long trades. So yeah, all you have to do is know the higher time frame intention. All you have to do is know the higher time frame direction actually. So you'll be able to easily trade the lower time frame. Okay, let's see the actual analysis. So as you can see, price has changed character here to the upside. After a change of character, it broke structure here to the upside because that was the less structural high point, less structural low point, break of structure to the upside here. Actually, a higher time frame, change of character here, liquidity sweep with this movement. As you can see, fill up the inefficient movement here at this region, tap into this demand zone here. After this, price created a liquidity trend line here, created another break of structure here to the upside with body break. Liquidity trend line, as you can see, this liquidity trend line will be swept out, I believe, after the tap of this supply zone. And actually, price is on the way down to create the new higher low. So how does this structure look like on the 4-hour chart? It looks like a low point, higher low point, higher high point, and possible higher low point. After this possible higher high point, possible higher low point, and break. This is how the structure actually looks like on the higher time frame 4-hour chart. So we can expect the formation of a higher low, and we are actually looking for a reversal point somewhere around here, right? Okay, let's just zoom in. This is the 4-hour chart, bigger picture. Let's just zoom in and see the actual current leg. What is this actual current leg doing? Here was a break of structure to the upside with body closure, as you can see on the 4-hour chart. So that's a pretty valid break of structure to the upside. As you can see, this was the last demand zone here, last 4-hour demand zone that has created a break of structure to the upside. This demand zone has been broken, right? This demand zone has been broken, and there was a change of character to the downside actually, and the bearish order flow has been started to the downside on this actual 4-hour leg. But when we know that the actual higher time frame is still bullish. The daily chart, the weekly chart is still bullish, right? Creating a low, high, higher low, higher high, higher low, expectational higher low. Even though the 4-hour chart has changed character here and the trend on the 4-hour chart is bearish at this region, we can expect a reaction on some sort of low point. We can expect a reaction on some sort of demand zone at this region, and we can actually expect a 15-minute change of character here and the continuation of the overall bullish order flow after this supply. Because the higher time frame intentions are bullish, we are expecting this supply to be tapped. So don't let yourself distracted by the noises on the lower time frames. Don't let yourself distracted by the noises on this leg. Just zoom out. Just look at the bigger picture. If you take a look at the bigger picture, you'll see that the actual higher time frame trend in this region is bullish. Of course, the higher time frame trend is still bearish because, as you can see, price has created inefficient movement to the downside and it's on the way up to fill the inefficient movement. So the actual monthly chart is bearish. Of course, it's printing the new lower high because, as you can see, this is the monthly structure: high, low, lower high, and expectational lower low. This is the monthly. But on the 4-hour chart, on the weekly chart, and on a daily chart, the structure is bullish at this region and it's printing the new higher low. So these timeframes are correlated. These timeframes are fractal. All you have to do is understand the actual trend. All you have to do is understand the trend on every single time frame. But if you understand the trend on every single time frame, you'll be able to trade the lower time frame. Because if you don't know the higher time frame intention, if you don't know the higher time frame trend, the 1-minute chart will be just a noise for you. The 1-minute chart is noisy. You can't just simply understand the 1-minute chart without the context of the higher time frame chart. Okay, so just zoom out before you make your analysis, just zoom out before you trade and actually see the higher time frame intentions. And currently, let's just continue the overall 4-hour analysis. So there was a 15-minute reaction at this region. I don't know if this is the correct 15-minute zone, but prices reacted on the 15-minute extreme zone at this region. As you can see, there was a reversal to the upside, and prices tapped this 4-hour supply zone at this region. This was the last recent supply zone, last recent 4-hour supply zone that has created a vehicle structure to the downside. Here with this movement and swap liquidity to the downside. Here, this was double bottoms, as you can see, first bottom, second bottom, liquidity sweep, breakout structure, top of the demand. So this was actually pretty valid supply zone, pretty valid 4-hour supply zone, but this will be broken. Sooner or later, this supply will be broken. Price is actually looking for a demand tap. Price is waiting for a demand to be tapped and a reaction on that demand zone, and it's waiting for more fuel to be added to price to actually break above this supply zone, break above the structural high point, and tap this higher time frame supply zone. Because the trend is still bullish at this region, and it's printing the new higher low.
Sorry, Marcel.
Yeah.
Also, you can see that about the supply zone, price created a beautiful trendline liquidity.
About this, yeah.
Yes.
Sorry, I couldn't draw. Of course, there's a liquidity too. And of course, there's more liquidity in the form of a double taps. As you can see, here's a perfect liquidity line. And this liquidity has been built up for the upper supply zone. Every single liquidity is leading up to the supply zone. Of course, there's liquidity on the downside too. So there's downside demand liquidity here. But this liquidity is being built up for the upcoming short. So there's a low chance that price will reverse in the middle of nowhere here, reverse in the middle of nowhere, and sweep the actual liquidity line on the downside when it's bullish. So what can be expected when price is bullish? If price is bullish and we have upside liquidity, you can expect the upside liquidity to be swept. We can expect this upside liquidity to be swept and tap off the supply zone. And when price sweeps the upside liquidity and taps the supply zone and changes character here on that supply zone, so the actual change in the trend, the actual change, higher time frame intention change is being happen, now you can expect the downside liquidity to be swept. It's in a bullish trend, liquidity on the upside, bullish trend, upside liquidity sweep, reversal, change in the trend has been changed to bearish, downside liquidity sweep. And overall, this liquidity lines up with our higher time frame monthly structure, because this liquidity is leading up to this supply zone. The monthly structure is waiting to be printed a new lower high, liquidity on the upside, sweep of that liquidity, tap of this supply, downside liquidity, print the new lower low, breakout structure, downside liquidity sweep, monthly structure is being continued. So let me just zoom back in. So what can we expect here at this price action region? We can see the prices strongly reacting on this supply zone. As you can see, strong reaction on this supply zone, couldn't break above this supply zone, tried several times, but after the 1, 2, 3, 4, 5, fifth attempt, prices failed to break above and created a huge inversion movement to the upside. So what can we actually expect from price at this region? We will have to switch to the lower time frame, and we'll have to find a good demand zone on this region on the extreme of the leg. Or maybe we'll be able to find some demand region at this lower region, because there's liquidity here, as you can see, and price is currently in a bearish trend on this 4-hour leg. So if there's a bearish trend on this current 4-hour leg, we can expect the sweep of the most recent liquidity, the last recent liquidity, which is this one. If the last recent liquidity is being swept and the current leg is bearish, liquidity is being swept, tap of some sort of demand down here after the liquidity sweep, it will be able to reverse price and continue the actual overall daily trend to the upside. You can just take a look at this. Upside movement, downside movement, upside movement, downside movement. This downside movement is currently bearish. The upside overall high time structure is bullish. Liquidity built up for some deeper demand region, printing the new higher low, sweep of that liquidity, possible reversal on this zone, continuation of the bullish movement. So everything is moved by liquidity. All you have to do is understand the structure and combine it with liquidity. Okay, so what are the actual expectations from price at this region now? First, we can expect some 15-minute demand tap at this region, change of character on this demand zone. If there's a change of character and good entry criteria, just entering a long trade. Second, mark out a new deeper demand region, which lines up with liquidity, sweep of that liquidity, tap of this demand zone, continuation, bullish movement to the upside. These are the possible expectations for the higher time frame chart. Let's just switch to the 15-minute chart. And let's see how the structure actually looks like. Can you just follow me? Can you follow me, guys?
Yes.
Yes, sir.
Yeah. Yes, sir, yes.
Is it all understandable?
Yes, it is.
Yes.
Okay, just let me know if you don't understand anything.
Okay.
Okay. So 50-minute chart. Price has stepped into the supply zone, right? This was the 4-hour valuable supply zone. Here are the 5 attempts, as you can see, first, second, third, fourth, fifth attempt to break above the supply, couldn't break above the supply. Inefficient movement to the downside. This is the huge inefficient 1 4-hour candle on the 4-hour chart, of course. So what can we see on this chart? We can see, let me just remove this drawing. We can see that here's an extreme of the movement here at this region. And this movement has changed character on the 50-minute chart here to the upside, as you can see, change of character to the upside. 4-hour demand tap, this was the 4-hour demand tap, which has created a new breakout structure to the upside here. This was a 4-hour demand that has caused the new breakout structure to the upside. This demand is being tapped here, 50-minute change of character to the upside here. Liquidity is building up for this zone. Liquidity is being swept at this zone and down to this zone, as you can see. So this actually looks like a perfect textbook setup. 4-hour zone tap, 15-minute change of character. Liquidity is being built up. Liquidity is being swept. The zone is about to be tapped. What are we waiting on this zone? Another confirmation, right? A 1-minute change of character on this zone. If a 1-minute change of character, and let's say a good entry criteria happens on this zone also, so let's say it creates a change of character here to the upside, liquidity for this zone, then we'll be able to enter on this trade. This will be a perfect textbook example for a continuation of the bullish trend. Just once again, 4-hour trap, 4-hour tap, strong reaction, V-shape recovery, as you can see. Okay, let's just use the criteria tracker because we can use the criteria tracker in this region. Just quickly open it, sorry. Entry criteria. Okay, perfect. Higher time frame zone mitigation. X. Inefficient movement. Here's an inefficient movement, V-shape recovery, X. Strong reaction on the zone, which means V-shape recovery, X happened, as you can see. Top of this 4-hour zone, immediate reaction and strong reaction. So there's an X. Just delete this. X. Change of character, breakout structure, flip. Change of character has happened. Here, as you can see, perfect change of character. X. Liquidity sweep. Liquidity is being swept at this region perfectly, as you can see. X. Liquidity creation. Liquidity creation, which is being swept right now. X. Price isn't coming from an unmitigated zone. That's false because price is coming from a 4-hour supply zone. Price has mitigated a 4-hour supply zone and coming from that zone. So there's not an X. Pro trend X because the pro trend on the higher time frame is bullish, and we are following the pro trend, and we are expecting a new higher low, which could be this one. We are expecting a new higher low, and this could be the new higher low, and this could be a really, really good entry opportunity for the swing trades. So we can actually, if we can find a good entry opportunity at this region, we can target the higher time frame supply at this region with our final targets. So this could be a really, really, really good entry opportunity at this region because this is lines up with our pro trend. So this is an X for this one too. 7 criteria zone. Price isn't coming from an unmitigated zone. That's missing, but we are waiting for a confirmation entry. So that will be fixed, right? That will be fixed. This is the higher time frame criteria tracker. We will be able to track another criteria if price reaches this zone. If price reaches this zone, we'll be able to track the lower time frame criteria. So let's say, let me just switch to the 1-minute chart quickly. We've tracked the higher time frame criteria. Here's the lower time frame. Second zone, higher time frame zone mitigation. That will be an X2 because price is mitigating a 50-minute zone. So that's an X. Inefficiency, let's say after the mitigation, it creates inefficient movement to the upside. So that will be an X2. Strong reaction on the zone. Let's say it creates a strong reaction X. Change of character. Let's say it creates a change of character here after the tap. That's on X. Liquidity sweep. Let's say it sweeps liquidity. X creation. Let's say it creates liquidity. And it's not coming from unmitigated zone. So I mean, price is creating a change of character to the upside, and reverses in the middle of nowhere here. Here's a supply, here's a supply, and it reverses in between two supply zones, so it isn't coming from an unmitigated zone. So this could have been a perfect entry opportunity. Both of the higher time frame has been confirmed by the criteria tracker here. This has been confirmed, as you can see, with 7 criteria, the higher time frame, and the lower time frame can be confirmed with the criteria tracker 2. And if all of this happens, that will be a perfect textbook setup. That will be a perfect textbook example for the concatenation. And that will be a perfect textbook setup for the criteria tracker, of course. So actually, that's how can you track your criteria with using the criteria tracker. Make sense?
Absolutely.
Yes.
Okay, hey mate, I already heard about the V-shape recovery last webinars. I didn't understand the concept. If you don't mind, please make a video. Actually, that doesn't really need a video. The V-shape recovery is just basically the name of the concept. Price is coming down to a zone. Let's say this is a 15-minute zone, taps the zone, and immediate reaction after the zone tap. V-shape recovery, tapping the zone, reacting on the zone, creating a V-shape. That's all. This concept is really easy, just a name. You can just actually say this, it's a strong reaction, not a V-shape recovery. Both are the same. Why don't you use the zone tracker for that zone? You can use the zone tracker too. You can come from your zones and the criteria and criteria both ways. If you'd like to use the zone tracker too, that will be another confirmation that it will be valid. So yeah, the higher time frame has been confirmed with the entry criteria tracker, as you can see. All of this has been confirmed on the higher time frame. We are waiting for a lower time frame confirmation, but let's just switch back to the 15-minute chart and continue the analysis. I didn't understand the strong reaction of a zone to validate a new created zone. Mario, what's your question here? What's unclear for you? Sorry.
Hey,
Hey, ma'am.
in the criteria sheet,
Yeah.
we have one criteria that says strong reaction on the zone.
That's basically a V-shape. That's a V-shape recovery that I just showed you. This is a strong reaction.
So, but that only applies to the changes of character and continuation setups. It doesn't apply to flips, or it does.
Okay, let me just show you what do I mean under this strong reaction. So let's say here's a zone. Price is coming down to mitigate this zone, taps this zone, and it ranges inside of this zone and can't find the good decision to go. So the buyers and the sellers are battling in this zone. If this happens, it won't be a strong reaction. If price is coming down to mitigate this zone, taps this zone, and immediately reverses, this will be a strong reaction. This is not a strong reaction. If it ranges inside of this zone, and after the range, it finally decides its direction. This is not a strong reaction. This is a strong V-shape recovery. This is a low reaction, low volume reaction. This is a confirmation. This is not a confirmation. This is a criteria. This is not a criteria. Okay?
Okay, got it. Thanks.
Of course.
Hey, Martha,
Hey,
can I ask a question?
of course.
Now, currently what you said, we are waiting for a 1-minute choke inside that 15-minute choke, right? But the structure has already moved so far from there, creating multiple breakout structures in 15-minute chart.
Sorry, can you just repeat, please?
The demand currently we are waiting for,
Yeah.
but the price moved so far away from that origin of the choke and created multiple breakout structure to the upside, and now it's coming back. So is it still valid?
Yeah. We are still waiting for a confirmation. If price can give us a confirmation here on this zone, we'll be able to enter. It's still the origin of the change of character. It's still the origin of this huge inefficient movement to the upside. It's still the origin of the actual bullish order flow to the upside that has caused the tap of this supply zone. Of course, there was a breakout structure here to the upside, but still this is the origin of the overall change of character. And this origin of the change of character has happened after a 4-hour zone tap. And after a 4-hour zone tap, it created a huge V-shape recovery, change of character to the upside. And this could be our confirmation for the continuation of the overall bullish trend. As you can see from this demand zone, prices created this breakout structure to the upside, tap of this demand zone, confirmation of this demand zone because prices change character on several places, confirmation of this demand zone, coming back down to this 50-minute demand zone that has confirmed the 4-hour zone, waiting for a one minute confirmation. And after the 1 minute confirmation, all of the time frames will be confirmed because the 4-hour is confirmed by this breakout structure to the upside. The 15-minute is confirmed by this change of character on several places to the upside. And we are waiting for a 1 minute confirmation. So all of the time frames will be confirmed. 4-hour confirmed, 15-minute confirmed, 1 minute is waiting to be confirmed. If it confirmed, we'll be able to enter and write the expectational long trend and write the expectational higher time frame main order flow. Okay.
Yes, sir.
Is zone break, you get another. So yeah, exactly. If this zone breaks, if this 15-minute zone breaks, we will get another supply zone and we'll be able to find another demand zone somewhere around here that lines up with liquidity somewhere around here. If this happens, we'll be able to ride the expectational short order flow to the downside to some deeper demand region at this point. All you have to do is react on this zone, but I will talk about this later. Let me just finish the analysis. If 15-minute demand not mitigate, even can we trade 15-minute supply? What? If 15-minute demand not mitigate, even we can trade 15-minute supply demand in 1 minute change of character. That's safer to wait for a 15-minute zone tap. That's the best possible scenario that will happen. If you're waiting for a 15-minute zone tap and the 1 minute change of character on the 15-minute zone, that's the highest probability setup. So if you're insecure about your direction, if you're insecure about your trades, just simply wait for a 15-minute zone tap. You can sell that zone because sellers took the control from buyers. What do you mean? You can sell down to this zone, of course. Yeah. Price exchange character here to the downside, or even here, and start with a bearish order flow down to this demand zone. Of course, you'll be able to ride, or you are being able to ride the expectational short order flow down to this demand zone. You can sell down to this demand zone because sellers are in control at this region. But you have to know that the higher time frame direction is bullish, and more likely buyers will be able to reverse price here, and buyers will be controlled at this region. So you can actually ride the expectation short order flow down to this demand zone, and you can expect a reaction on this demand zone, and you can expect a demand continuation and demand control at this region. Because as I showed you several times, the higher time frame order flow is bullish, as you can see. Buyers in control, sellers took over control here. Demand tap, buyers are in control again, change character here. Sellers took over control, and we can expect a confirmation on this 15-minute zone too. And as I said, all of the time frames will be confirmed. 4-hour confirmed, 15-minute confirmed, waiting for a 1 minute confirmation. It's a battle between sellers and buyers, but buyers are stronger because, as you can see, the overall trend is bullish. So on the higher time frame movements, on the higher time frame main movements, buyers are in control. Sellers can take over control at this region, but buyers are confirming the trend, confirming the direction with this movement. Sellers can reverse the trend a little bit and confirm this zone again. Buyers can confirm this zone and continuation of the overall bullish order flow. And after all of the time frames are being confirmed, so the 4-hour time frame is being confirmed, 15 minutes is being confirmed, 1 minute is being confirmed, we can expect a new higher high to be created on the higher time frame. Because as you can see, this is what happened right here actually. Here was a 4-hour zone, price has stepped into this 4-hour zone. Price change character here and here to the upside on the 15-minute chart. So let me just draw it with zone examples. Here's the 4-hour zone, price has changed character here to the upside on the 15-minute chart. So 15-minute change of character has happened. 15-minute zone, this was a 15-minute zone right here. That has created a change of character here. I believe 15-minute zone was confirmed also because, as you can see, here was a 15-minute trend. On the 15-minute zone, after a 4-hour tap, we are waiting for a 1 minute confirmation here. 1 minute confirmation has been happened here, as you can see. That was some sort of 1 minute zone, and the continuation of the overall bullish order flow, which was leading to a swing high break of structure here at this region. So as you can see, the same thing is happening right now. Here, 4-hour confirmation happened. 15-minute confirmation here happened. 1 minute confirmation here happened. New swing break to the upside with this movement. The same thing is happening again. 4-hour zone, tap of that 4-hour zone, confirmation happened. 15-minute change of character, confirmation happened. Waiting for a tap of that 15-minute zone, waiting for a 1-minute change of character on that zone, 1-minute confirmation. And if the confirmation happens, the new higher high will be formed on the higher time frame. Each time frame confirms another time frame. Just take a look at this pattern. Confirmation, 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 higher high. Confirmation, confirmation, expectational confirmation, expectational higher high. This is how the market is being moved. This is how it actually moves. Make sense for you? Can you follow me?
Absolutely.
Yes. Yes.
Perfect. I have another question
Hey.
about reading the 1-minute structure after 15-minute zone tap. Now we have a reaction from 5-minute. Can we consider this demand value in just a 15-minute? Let me just check the 5-minute structure first. There was a 5-minute demand zone. I believe this will be liquidity. This will be liquidity more likely because, as you can see, first top, first bottom, second bottom. This could be liquidity for the 15-minute extreme. Basically, the 15-minute chart and the 5-minute chart are the same chart. 5-minute is just a confirmation or refinement of the 15-minute chart. So you can actually expect the 15-minute zones to be tapped and not the 5-minute zones. 5-minute zone is for the confirmation and refinement of the 15-minute chart. Okay. Let me just continue because the session, yeah.
Remember once you said in the Discord that you will be discussing about the weak high and weak low points, that concept.
Yeah, that will be happen. That will be hosted.
Okay, okay.
So let's just see what can we expect here. Just finish the analysis because the session will open in 4 minutes and I have to send the markups too. So let's just finish the analysis. So as you can see, price has changed character here to the downside of the 15-minute chart and started the bearish order flow. Price has reversed here before tapping into a 15-minute zone, 15-minute extreme zone, 15-minute valuable zone. So it reversed before tapping into the zone. So what can we actually expect from this price section? We can expect the tap of this less recent 15-minute supply zone up here after the 15-minute supply tap at this region. Sorry, we can expect a 1-minute reversal on this 15-minute zone. 1-minute reversal, 1-minute change of character happens here. We'll be able to write the expectational order flow down to this demand zone. If this demand zone is being tapped, we can wait for a 1-minute confirmation here, good entry criteria, and we can hop in a long trade and write the expectational long order flow. Right? This is our plan for today. This looks perfectly actually. Here's liquidity 2 built up for this zone. Perfect zone that was leading to a sweep here, leading to a breakout structure here. So this is a valuable and valid supply zone, waiting for a tap of this supply zone, 1-minute change of character, expectational order flow down to this demand zone. We'll be able to ride the shorts down to this demand zone. Tap of this zone, change of character on this zone, expectational order flow riding to the upside. Basically, that's the plan for today. Let's just see the 1-minute chart. And let's just see this one right here. And the question was good. Actually, I don't know who has this demand zone. I believe Kish, were you the one who's asking this? Doesn't really matter. The question was good. And the question
Hey,
was,
there's red folder USD in 2 minutes.
yeah. There will be that further news.
Okay.
So, of course, that's the lunchtime supply, but you can wait for a confirmation on this zone. You can simply wait for a confirmation, or if the confirmation of this zone does not happen, there will be a sweep of this liquidity and step of this supply zone up here. I'm just breaking down the 1-minute chart. Just wait a minute. I'll remove this drawing from the screen, please. So the question was good. We can expect a reaction on this demand zone, but this demand zone will be liquidity for the 50-minute zone down here. And price can actually reverse on this 5-minute demand zone. And as you can see, price is reversing on this 5-minute demand zone. And if price can reverse on this 5-minute demand zone, we'll be able to write the expectation order flow up to this supply zone. So you can ping pong between zones. Changing the trend, confirmation here, write the expectation bullish order flow here. That will be considered as risky because there's liquidity, of course, but you can actually do this. If price taps this supply zone and creates a change of character here to the downside, you'll be able to write the expectation order flow down to this demand zone. If price breaks above this supply zone, taps this upper supply zone here sweeps the liquidity and creates confirmation here, you'll be able to write the expectation order flow down to this demand zone. If this demand zone is being tapped, you'll be able to write the expectation order flow after the confirmation to the upside. So all you have to do is wait for zone reactions. Price is reacting on a 5-minute zone now. If it confirms this zone, we'll be able to write the expectation order flow to up here. If this zone is being confirmed, we'll be able to write the expectation order flow to down here. All about reaction. Is it not this supply just liquidity for upper one? Yeah, that will be liquidity because this is a lunchtime zone. This is a lunchtime zone, as you can see, and this is not a lunchtime zone. So this zone will be liquidity for the upper zone, and there's triple tap. So this one will be liquidity, I believe. All you have to do is react. Okay, guys. The session is open right now. I will send you the markups. Sorry, I hope this session was helpful for you and you could understand the actual higher time frame directions. You could understand the actual intentions of price. So let me know how you like this session.
Fantastic, bro. Thank you.
Guys, if you are looking for high variable zones, either of the 15-minute or the 4-hour chart or any chart, you can use the criteria tracker as well to find the best zones.
Yeah, guys. Sorry. Just one more thing before we finish this session. I will be hosting a backtesting session on Sunday again. That will be a bonus session on Sunday, because as you may know, Sunday sessions are bi-weekly, so they happen to be hosted on every second Sunday. And on last Sunday there was a backtesting session, but I will host a bonus session on this Sunday too, because I saw that was really helpful for you guys, so I will just host it. And yeah, thank you again for being here. And I wish you guys a beautiful day. Wish you guys a profitable day. And just wait for a zone reaction. Wait for the best possibility setups. Wait for the best confirmations, and wait and play safely. Just sit on your hands until you see something clear. Okay.
Thank you, buddy.
For your time, dude.
Okay, guys. Thank you for being here. Wish you a beautiful day. We'll be sending a markup soon.
Have a nice day, guys. Take care.
Have a nice day, guys. Take care.